Welcome back. The European Central Bank has been criticised in some quarters for its slow response to the banking crisis. But according to one of Europe's most powerful politicians, the ECB may actually have been overzealous in its reaction. Over to London now, where el-shahat has more.
As European voters headed to the polls, German Chancellor Angela Merkel ignored an unwritten rule of German politics and commented on monetary policy. She criticised the European Central Bank's decision to pump money into the banking system in an attempt to ease the effect of the economic crisis. This signals that Germany might indeed be more worried about her economic and financial situation than she's letting on. So, do secrecy and economics go hand in hand in Germany and across Europe?
Esta es la Unión Europea.
This is the European Union.
500 million people, 27 different countries, and one election.
1, 2, 1, 2. Can you hear me?
The EU's ad to encourage people to vote is Europe, can you hear me? Europe's citizens are among the most watched in the world. The continent has more video surveillance and CCTV cameras than anywhere else. So not only can they be heard, they can also be seen.
Despite such private intrusion into their lives and monitoring by Big Brother, the European taxpayer is being kept in the dark about the state of their banks being swept up in the financial crisis.
Yet it's the European taxpayer that will foot most of the bill for bailing out the banks. Shedding light on the state of Europe's banks is like carrying out a covert operation, and this is due to the lack of transparency by governments. In Greece, the cradle of democracy, government came to the bank's rescue to the tune of $35 billion. That's almost the equivalent of 10% of the whole economy, without explaining why to its own citizens. In Germany, because a confidential report from the country's regulator was leaked, Germans found out that their regional public banks were holding an astonishing $1.1 trillion in bad loans, which they will have to pay for. And in Spain, banks are in serious trouble. That's because house prices have crashed, leaving banks holding on to lousy, worthless mortgage paper. So Spanish banks have asked the European Central Bank for $50 billion, which they've got. But that money comes from a pool of funds that belongs to all the ECB's members. Germany, because it's Europe's biggest economy, puts more money into that pool than any other country. And this is making some people say that this is a covert bailout of southern banks, such as those in Spain, underwritten by German and North European taxpayers. But is anyone telling them this? The International Monetary Fund, the IMF, has asked Europe to come clean about the status of its banks by carrying out so-called stress tests, similar to those that took place in America. These would show which banks are healthy and which would need more money if the recession deepens. An opportunity for much-needed information and openness. And it would also allow the taxpayer to monitor how their money is being used. The EU came back saying that they will not provide such a detailed picture of their banks, but would instead carry out aggregate stress tests, a vague, undefined, one-size-fits-all test that will provide little clarity. So why all this lack of transparency? Well, this is in keeping with the European tradition of how economic policy is made and managed. It's mostly a private affair made by a very small group of people, an elite if you like. Take the European Central Bank. Unlike its American counterpart, the Federal Reserve, it doesn't publish any of its minutes. And it doesn't stop there. European institutions on the whole, unlike American ones, are less transparent and accountable about their decision-making process. And this economic crisis has truly revealed this fundamental flaw. And this raises fundamental questions about a European project that doesn't answer directly to its voter and taxpayer. So what's the use of being heard if you're being kept in the dark?
Extreme poverty in the Philippines pushes many to resort to working abroad to make ends meet. But what happens to those who choose to remain at home? Well, organisations in the Philippines are attempting to alleviate the harsh realities of poverty by offering microfinance loans. Veronica Pedrosa has more.
It is now widely accepted that the global financial crisis was precipitated by the sudden drying up of credit as the big banks refuse to lend money. In many cases, it's small lenders who have stepped into the breach. In the Philippines, microfinance organizations hand out small loans, typically worth about $100 to individuals. $360 million have been loaned out over the last 6 months. However, with the global economic crisis taking hold, there are concerns that these people may have difficulty keeping up repayments. The Philippines' economy, after all, shrank 2.3% in the first quarter of this year and could be about to enter recession. Unemployment rose from 6.8% to 7.7% in the last 3 months of 2008. Against that backdrop, many are struggling to keep their heads above water. Marga Ortigas explores how Manila's poor are weathering the economic crisis with lessons they've learned from microfinancing.
In a cramped Manila neighborhood, 51-year-old Josie Concepcion works to turn the old into gold. Taking out a microfinance loan 3 years ago, she set up a small business making bags out of recycled newspaper. She wanted to help her husband make ends meet. Now, she earns more than he does as a driver. But business isn't as good as it used to be. Before, she says, we could sell at a proper price. But now, it's all about bargaining. So we've had to bring the prices down, but it's still better than nothing. Her weekly earnings have dropped by a quarter, but she says she's not worried. It's just a matter of being flexible. She can still feed her family and send her grandchildren to school, an opportunity she missed for her own children. Through any crisis, she is determined to keep her family afloat.
Tens of thousands of Filipinos in hundreds of villages like this one, just in Manila, have benefited from microfinance loans. Over the last 6 years, some $11 million have been given out. Now, many of the beneficiaries say that the lessons learned while involved in microfinancing are also what's helping them get through the global economic crisis.
In another village, 50-year-old Nene Gakutan prepares her shopping list. Her store is running out of supplies. She too received microfinancing for her small business. Now she's got savings, and her earnings go to her children's education and to pay for her family's basic needs. It's all about adjusting, she says. If we see that something isn't selling and there's a need somewhere else, I try to fill that instead. I haven't tied myself to just one way of making a living. It's thinking like that that make Nene and Josie the ideal recipients of a program called Sikap Buhay, or Strive for Life, where the local government works with the private sector to give out microfinance loans to help the poor start small businesses. The organization's funding hasn't been cut despite the global economic slowdown, and its chief says women are their preferred clients because they're more responsible and always pay on time.
We say in Filipino, it's the women who are more madiskarte, meaning they have to find all means and do creative efforts in order to earn, just to make the family needs, for the family to survive.
In small corners like this all over the country, microfinancing has helped small entrepreneurs learn they are not without hope. And because of that, they are determined to survive the crisis, one flexible step at a time. Marga Ortigas, Al Jazeera, Manila.
And you can keep up to date with all the news on our website, aljazeera.net/English, and click on the left-hand side for the business page. That's it from me, Lauren Taylor, this week on Counting the Cost. Thanks for watching.